Hello and welcome to Professional Accountants Changing Business for the Planet. My name is Sharon Machado and I'll be providing a simple guide to natural capital management. In this series, the connected world I talk about is not just an international trade or a digital one, but one that's evolved over millennia, natural capital creating risks and opportunity for business. This introduction, part one of the series, will outline the call for businesses to act, the strategic actions they should take, and the role of the professional accountant, which the future parts of the series explore. There is a guide, one for each accountancy role. So I'm going to start with a call for business action. Why should they better manage natural capital? Natural capital is the planet's renewable and non-renewable environmental resources and processes, supporting organisations and in turn society's prosperity. From the air, water, land, minerals and forests to biodiversity and ecosystem health. To aid understanding of its importance and potential materiality, think about the types of resource, or in other words, capital, a business uses across its value chain. The International Integrated Reporting Framework identifies 6 interconnected, interdependent capitals that drive business value creation. Now let's consider if these capitals are recorded in the balance sheet or profit and loss in a similar way to financial capital. And the answer is no. But just like financial capital, they are enhanced or eroded. In fact, there is a constant trade-off between them, making it crucial for businesses to properly understand their connections. An understanding that's made more likely when the capitals are recognised, measured and reported. Without sufficient understanding, ineffective natural capital management is more likely, and that can lead to a vicious cycle. I'm going to give you an example of Scottish Highlands whisky, whose success is in part due to the mineral composition and purity of the water used. This water is free and naturally occurring. Therefore, under current financial accounting rules, the water itself would not be recognised. However, the financial costs associated with processing it would. Yet, climate and local activity can impact water availability and quality very easily, creating business risks. So whether it's additional costs or even impairing the viability of the product itself. So if the water is not properly appreciated, and by that I mean recognised and measured, even for internal purposes, then risk management controls may not be effective or efficient. A 2019 CSR Europe study suggested that over half of companies consider biodiversity to be material, yet it's not sufficiently integrated into internal or external reporting and therefore decision making. However, when it is integrated through risk and opportunity assessment, it can lead to sustainable business models and with that, virtuous cycles. And in virtuous cycles, the risks are known and they are being mitigated. And that provides confidence to stakeholders who can now justify investment in further natural capital management strategies, continuing the virtuous cycle. So you may be thinking, well, how real is the prospect of a vicious cycle? And up to 1960, because the natural capital ecosystem was broadly in balance, the prospect wasn't that high. However, let us fast forward to today, and it seems that there's very little left for wildlife when 96% of all life on Earth is occupied by us humans and the farmed animals we consume. And if you have a look at the statistics on the visual, you can see the size of the impact. So, as at 2020, it is estimated that humanity has wiped out 83% of wild mammals and half of all plants. And what that means is that the natural capital ecosystem is likely to not be in balance. That will have ramifications for business, whether it's from supply chain through to business model, therefore also for society. Now, as at 2020, at a macro level, estimates indicate that more than 50% of global GDP, or $44 trillion is moderately or highly dependent on nature, with no industry truly spared. Therefore, this macro problem is likely to be a material issue at a micro level. In other words, for many organisations. We've considered the call for business to act because of the demands and the call from nature, but there are other calls to action. starting with the call from society. Now, society demands greater care for the environment. A 2020 McKinsey survey found that 2/3 of consumers believe it's vital to limit the impacts of climate change, with 88% wanting more attention being paid to reducing pollution. What's more, consumers are acting. 57% are making changes to their lifestyle to lessen environmental impact, more than 60% recycling, and only buying products that use environmentally friendly packaging. Now, COVID-19 has heightened this view, but this view is expected to continue. We have younger generations who are reviving the second-hand market. There are more of us demanding more durable products, so this will reduce the total amount being purchased. Now, while these findings relate to fashion, what we're seeing is this impact is also being experienced across other industry sectors, and so therefore is a big signal for business to adapt what they do and how they do it. Further push comes from policymakers driven by zero carbon ambitions, and these policymakers are setting regulation, providing incentives and penalising negative impactors, and therefore driving business model transformation. Take the EU. As part of its Green Deal, it is committed to action, whether through direct investment, incentives or penalties. For example, they are reviewing the indirect tax exemptions for air and maritime passenger transport. Another example comes from the US wind farm incentives. By way of tax credits, what they're doing is making feasible projects that otherwise would have had unacceptable rates of return. And it's these incentives that allow organisations to balance multi-capital stakeholder needs as they transition to becoming more sustainable in their operations. And what many of these organisations are asking for is help to better appreciate the policies that are out there, including how to fairly reflect them within their investment and management appraisal systems. And so now I'm going to move on to standard and framework development. And at a national level, focus on natural capital started as early as 1992 at the Rio de Janeiro Earth Summit, where nations identified the need for integration of environmental and economic information in order to manage the transition to more sustainable economies. These national principles have filtered into guidance and mandatory requirements for organisations in the form of standards and frameworks. There are so many, and so organisations are asking for help to identify which to use and how to use them. Furthermore, investors are increasingly choosing green. They want to better understand governance, strategy, risk, and metrics as aligned to recommended frameworks and guidance, such as the TCFD. Now, just to name a few, BlackRock, State Street, HSBC, Pollination Climate Asset Management require investee organisations to know and report against these issues. However, there are multiple information gaps that are difficult to reliably close. Organisations require support from information systems and analysis competency to recognition, measurement and reporting of risks and opportunities connected to the capitals. Demand for information is increasing. In the year to May 2020, there was a 24% increase in demand for a better understanding of supply and value chain, business dependency and impact on nature. Furthermore, there are other organisations who are developing tools for investors, financial institutions and governments. These tools use AI-powered technologies to help their stakeholders better understand supply and value chain, allowing them to visualize and explore organization data on deforestation, amongst other environmental risks, business policy, violations, and they furthermore create watch lists, bringing a systematic approach to compare organizations. Now, as a business, what you can do is enhance stakeholder understanding of what it is that your business does by providing supplementary information. As we've seen earlier, the other benefit of a better natural capital understanding means that you have greater scope to act, therefore avert vicious cycles and create virtuous ones. And with that, opportunity to reap reputational benefit, whether it's through recognition by media or more official channels. In January 2020, Orsted was ranked the most sustainable company by Corporate Knights, an official channel. And this accolade is the result of being clear on strategy and scope. And what they did was then develop the required business model, quality information systems to help them deliver their strategy. What action must business take? Starting with strategy, businesses need to follow one or a combination of the 4 R's: remove, reduce, restore, and reimagine success. Within this series, we'll see much more on the 4 R's, specifically how the profession should support formulating, executing, evaluating, and reporting on strategy that removes impact, for example, phasing out polluting activity, reduces impact by addressing resource and waste utilization, employing principles of only take what's necessary or what can be naturally restored, or potentially from areas that are already damaged, for example, deforested land, to then restoring environments, so for example, replanting felled land. But most importantly, reimagining success that's founded on a changed success mindset that thinks about success across all material capitals. It will lead to transformative innovation, for example, employing circular economy principles where waste is useful for another process. So if we go back to our Scottish whisky example, the barley that's used in whisky, once it's served its purpose in production, then the waste, instead of being attached with a liability for disposal, can now be treated as stock for sale, as animal feed. There are many organisations that have already started their 4 R's journey. And to deliver their strategies, what these businesses do is answer some fundamental questions of: what is our natural capital dependency and impacts on nature? What are our risks? What should we do? How will we do it? Over what timescale? And how do we measure success? And central to this is communication to bring stakeholders on that journey. Delivering the 4 R's requires business activities of investment and process underpinned by quality communication, data and evaluation. ACCA's report, Accountants' Purpose and Sustainable Organisations, pointed the role of the profession, supporting value creation, protection and communication, vital in bringing to life natural capital management strategies. Accountants should do this because they can think holistically, bringing together financial and non-financial capitals to mitigate information gaps and drive forward-looking quality decision-making. Acting ethically and in the public interest, with technical expertise combined with professional skill, which enables risk management and opportunities to be materialised. Accountants take a multitude of roles in business and on behalf of society. They perform interwoven functions of strategy formulation, evaluation, execution, reporting, leveraging technology and collaborating with other experts, such as data and natural capital scientists, to do so. In the remainder of this series, we explore how the interwoven functions of evaluate, formulate, execute and report relate to the 4 professional accountancy roles of business leader, performance manager, corporate reporter, auditor and assurer. Accountant leaders have the responsibility to connect financial and non-financial issues at a strategic level, driving holistic decision-making, identifying and managing strategic options together with the associated finance. They set the tone of organisation culture required to implement policies and processes. Now, these leaders are supported by the other roles. The role of performance manager that identifies information requirements, owns the information process and spots the triggers to drive the required interventions. This role uses integrated thinking to connect the capitals to business issues and strategy. Corporate reporters employ the tenets of good corporate reporting, telling the holistic story of value creation, connecting the multi-capitals, which therefore also indirectly recognises the multiple stakeholders who provide them. Auditors and assurers provide the multiple functions related to reliability and integrity of operations, both those reported and potentially to come, together with an assessment of the controls behind them. Now, while in this series we don't cover the role of tax professional, we know how important they are in shaping policy. And please refer to our report Tax as a Force for Good that outlines the potential policy actions that drive greener business. So what does each role get? Well, we provide an outline of the key how-to principles to support natural capital management, together with illustrations to bring that insight alive. And for those who want to know more, there are links to useful sources of information. Our insight has been gleaned from our own desk-based research, but also from our contributors, from whom we will hear. And I'd like to say a big thank you to them.